Hi, Larry Berman here, and here's what's on my radar this week and maybe on your radar too these days. Well, COP26 is fait accompli, and it doesn't really seem like much happened there. And some of the feedback, governments are going to be challenged on a policy and a spending basis to significantly move the needle. And I think one of the interesting things from the investing standpoint is that we're hearing more and more companies come out with strong ESG policies, not only on climate. Climate's obviously a very important thing. We have clean water, we have clean air. What's more important to human life than that? But social governance, what goes on in the C-suite, who runs the companies, fairness, equity, and inequality. These are all things that I think are going to become more and more important. When you look at the history of ESG investing, not quite 20 years old as an investment factor that really started to gain some traction. If you look at the last 10, 15 years of returns on stuff that's been ESG focused, in Canada here, the Janssen Social is a fund that's been out for quite a while, that it was an impact type investor. Returns generally on a broad scale aren't materially different than if you didn't consider an ESG factor in your investing. But over the last 2 years or so, and this just isn't oil and gas, guys, it's not just about carbon, although that's really important. You're starting to see the needle being moved. Policy that we heard announced last week, where the Democrats want to tax share buybacks as a way to fund some of their green initiatives and spending ideas in the States. So, you're seeing this impact more and more. And as more companies and more investment managers take the PRI Pledge, and that is principle over responsible investing, I think the more it's going to matter. So we like ESG. I'm actually launching an ESG fund early next year. Looking at this as an additional factor in terms of our quality and value screens we typically do on the companies we like to own. And so, again, increasingly important part of the market. So, with COP26, that was really on my mind this week. Obviously, the Fed. And the beginning of tapering, as we expected. They didn't surprise markets. A little bit dovish in the Q&A, and equities are ripping on that, and bond yields are coming down. The Fed is still going to be buying more bonds until we get these budget deals passed. And if we can get the infrastructure bill passed and some kind of bigger, broader deal, you're looking at another $2.5 trillion, and maybe $1 trillion of that front loaded. So I still see an imbalance coming. As the Fed pulls back, bond yields should stress higher. But right here, right now, it's not a big factor. And they managed to do a good job of talking down some of the inflationary pressures as well. Golf ball on the tee for the Bank of England to take a swing at inflation, and they were dovish. So you are seeing some central banks like the Bank of Canada step forward and say, yep, it's time to stop that, and they stopped it right away. And you're seeing others more material stature in nature than the Bank of Canada, more material impact on world financial markets, be much more cautious on their approach to taking liquidity away. We do see a fiscal cliff coming back half of next year, ties in with the end of tapering. We'll see what that brings, but for now, markets seem like they're in a melt-up mode, and I see no reason to get in front of that at the moment. Are we cautious? Absolutely. Are we bullish about the outlook? No, not really. The reasons the markets are rallying, to me, are not fundamental demand growth. Bull and bear pick of the week. Well, if you're an ESG player in the US, I like what they've done with the JUST ETF, JUST, where they're filtering the top 1,000 stocks in the US and they're basically throwing out the bottom half and saying this is our version of companies focused on ESG. I think you're going to see alpha there, starting to see outperformance. Not huge, but a little bit over time. So broad diversified index. BMO's got some ETF series out here in Canada. So bullish on ESG, still on a bearish side, very, very cautious on overall risk. And long duration assets in particular, tech stock valuations to me still, what's going on in the queues, I want no part of. Have a great week, everyone.